We got my boy in here. Roll Tide. Let's go. All right. All right. Cool, cool, cool. I love that name by the Spirit. That is lit. That brought me and my friends so much. Like, with the strength of 15 crackheads, I'll beat you. I'm like, what in the world is in the what in the hemoglobin and haberdashery is happening here? All right, so let me go ahead and just minimize my big old mug. Right? Anybody didn't come here to see me sit around and float in front of the screen. So, what we're gonna do is get that out of the way. Cool. And now let's come on over here to Coin Market Cap. Let's get rid of that for now and pull up our charts. Let me fix some of these lights. I got lights like everywhere right now. Alrighty. So coming here on Coin Market Cap real quick. Gonna get a quick refresh of the chart. See what we got going on. Bitcoin's jumped back up into the $10,000 range again. All right. Very nice. Very nice. Now we've seen Bitcoin test these, like I said, lower 10,000, high $9,000 area for a while now. As you can see, we've been in a nice decline. What I want to do is toggle us over here to the Bitcoin chart. And what I'm going to do is just refresh all of this here. Okay. Now, what I want to do first, because I want to make sure I start this Friday off correctly, because I have a lot of things I want to go through, and I want to make sure that I'm bringing all the new people along for the journey as well. All right. I think that's fair because I know a lot of times I can get right into it, and somebody who hasn't come on a Wednesday before will look at this and say, "What in the world?" This man started throwing all kind of colors and bars up here. So what I'm going to do is I'm going to bring us full circle, and then I'm going to get into some technical stuff. Okay. I think that's fair for anybody who's new, right? And everybody who's been here, it's nothing wrong with a little refresher. It's going to take us a couple minutes. It's not the end of the world. Okay. Now, what I like to do here is basically set up a scenario where we're all gonna take this journey of edutainment on at the same time at the same pace. Now, first things first, let me drop a couple of slides up here because I like to share with you guys and give you screenshots and all that good stuff to work with. So first things first, this is going to be a big deal in what we do tonight. Okay, I want you guys to understand what high frequency trading is. So that way, as I'm going through and I'm breaking things down and I'm giving examples, none of this comes off as like absolutely crazy or, like it sounds like it's something that's completely like I'm just talking outside of my neck. Now, high frequency trading is a program trading platform that uses powerful computers to transact a large number of orders in a fraction of a second, right? So essentially what's happening is you have lots of supercomputers or lots of very powerful computers that are implementing a lot of trades in split seconds. And I mean, they're not implementing small positions. They're taking big movements in the market, right? Really fast with the fractions of a second. This is why a lot of times once we see certain areas in the market get triggered, we see like big wicks just pop up out of nowhere, and then the candle just shoots up in the other direction, like instantly just reverses from that zone. You know that there's orders waiting there, and these high frequency trading bots are implementing trades much faster than you and I can do just simply by pressing buy and sell with our computers and our cell phones. So understanding that, it uses complex algorithms to analyze multiple markets and execute orders based on market conditions. This last half of this is the most important thing about a high frequency trading bot, all right? And the programs of the high frequency trading bots. It uses complex algorithms, right? What if there was a method that I could show you that would help you read what the algorithms are doing? And it's real simplistic, nothing crazy. You ain't got to go back to college to learn it. It's real simple. I'm going to show you one of the tools we're going to use, and it's going to be like boom, boom, boom. Like when we get back to the regular charts, you are going to lose it. And it's what I'm showing you guys tonight works on crypto, works on Forex, works on stocks, works on futures, works on options, works on pretty much anything with a candle on it. All right. Except for the ones you can get from like Bed Bath and Beyond. But outside of those candles, boom, this works on it. All right. So understanding that complex algorithms analyze the multiple markets, like I just said, all those different types of markets, and execute orders based on the market conditions. I'm going to show you guys what you're looking for within those zones. So then you can now take that information, double back, put it on a chart, and now you'll be able to kind of decipher and translate what the candles are actually telling you and what the candles are actually sharing with you. Don't laugh at me, man. I'm trying to get I'm trying to get all of the sauce together for you. Is that my boy Oren in here? That looked like I saw that name. I saw Wright for a second. I said, wait a minute. I saw Wright coaching. I'm like, wait a minute, is that Oren up in here sneaking in? I doubt it though. He probably got a session going on somewhere. He said, ooh wee, yes. Works, it works, it works. Christina already know. What's going on, Judy? My Australian family then popped on. All right, all right. That got me amped up early today. All right, guys. So I'm gonna get us off of here now. This is the deal. The tool that I'm gonna share with you guys today. Some of you guys already know about it. Some of you guys may not. You want to hear it? Here you go. Now, LOL. Nope. It's all good. It's all good. It's good company though with that right at the end of the name, boy. You can only do it one way. That's the right way. Okay. So check this out. What I'm sharing with you guys right now is the Fibonacci retracement tool. Okay. What's going on, BM? What's going on? Oh my goodness. You say hello all. Chandrell, what's happening? I know who this is. Chandrell. All right, so what I got up here right now, guys, is the Fibonacci retracement tool. The Fibonacci retracement tool is a very, very powerful tool. This is more than just a tool that's used when it comes to looking at harmonics and things like that. We can use this to gauge the overall sentiment of the market, right? And when I talk about how the banks are trading, what private investors are doing, what hedge funds are doing, they use a lot of Fibonacci in their trading. So when you're looking at the forex market, when you're looking at cryptocurrencies, and you're seeing these levels get hit and price falls and pulls back and drops down, for those people that have already been here, that have seen me do this, a lot of those guys were skeptical. A lot of those guys and girls were skeptical when they first came in. Like, all right, Kurt, like you expect me to believe this little rainbow bar you got up here gonna help me make some money? And I'm like, absolutely. And I'm gonna walk you guys through how this works and what you're looking for. Okay. So rule number one, right? When you're looking at a fib, let me go ahead and just remove this and start from scratch. Right here at the bottom where I'm picking this up at, Fibonacci retracement. When you're looking for a fib, you always want to start from the left to the right when you're drawing your fib. What's going on, Jay? You say first timer. Oh, let's get it then, first timer, Jay. All right, Jay Brass. So right now, when you're looking at the fib, right, you want to start from left to right. Now let me do this. Let's do this here. Let's say we have a high point, a low point, a pullback in price, and then we got price dropping down again, right? If we got a move like this taking place on the chart, price starts at the top, starts pulling down, pulls back up, drops back down. When I'm drawing my fib, I want to find my absolute high and my absolute low. And when I'm drawing it, I want to make sure I'm going from left to right. You never want to take your fib and do a move where you go, okay, I got my bottom and I'm dragging it up to the top like that. This is absolutely wrong. Your fib always starts from the left and will end at the right, right? So if I was going from high point to low point, it would have to start from high to low. If I was going from low point to high point, it would have to go from low to high, right? I can't go from high down to the low and then low to the high. It's always going to go left to right. Pro tip when you're drawing your fib, always left to right, left to right. Keep it simple, left to right. So first things first, let's get our Fibonacci retracement tool. What's going on, Mark? Florida family, first time. Oh my goodness, I got some first timers. Listen, I am so excited for all of you guys. This is your first time coming into this session on Club Cobain. You are about to have an amazing night and you don't even know it yet. Okay, so let me get this going because this is about to be hilarious seeing some of the reactions you guys got. Now, the only thing I ask if you're new is to 100% be honest with me as we start to break this down. You say, love my teaching, Sensei Kurt. Oh, man, I appreciate it. The recordings are lit, but it's nothing like being here live. Nothing like being here live. So we go swing high down to swing low, right? Now notice what we just got here. We got our left to right movement. We got our high point. We got our low point. Now it gets a little more intricate once we get to the actual live chart, and I'll break down the reasons of why it gets a little bit better and things like that. What's going on, Ferdinand? You say best session. Welcome to the noob. Yeah, man. I always tell everybody, like, once it's your first time, you hooked. It's like getting that first taste of Kool-Aid. You hooked for life after that. You know it ain't something you're supposed to be drinking every day, but once you get it, you drink it slow. You sip it like, oh, this is some good stuff. Right? Once you get that first hit, you good. You ain't going nowhere. All right. Yvette says this is my first time too. What? Listen, let me scroll up here. Oh my goodness. We got a nice amount of people in here this early in the session. Y'all about to have me in here going crazy tonight with info. All right. So here we go. Yeah. No, don't laugh at me, y'all. Y'all know I'm good with the jokes. All right. So here we go. Swing high, down to swing low. Now notice what happens with these numbers, right? We got high point, low point. As we see these levels here, let me actually fix this. I don't know who been touching my fibs, y'all. I'm looking at this like this is not right at all. Somebody even went in here and messed with my good stuff here. We got everything lined up here. Let me fix there we go. My template, remove. There we go. Fib, high, It's a low. Now, from here, we got high point, low point. Notice what happens when we see this, right? We're looking for price to pull back up. The whole key to this is wherever I end my fib, I want prices to continue to move in that direction. So even though price is dropping down here and I go from high to low, when price starts to pull back up, I'm looking for a level to enter for a sell. Okay, I've ended my fib here at the bottom. I'm still looking for a sell. The rule goes high to low. How low can we go? And then low to high, we're looking for a buy. All right, so high to low, how low can we go? We're looking for a sell here. So essentially, notice what's happening here. We got 12, 23, 38, 50, 61, 78, right? 83, 88. The numbers are getting larger as we go up. This is showing us that even though the sellers have made this big move down, we're gauging how strong the buyers are getting, right? So as the buyers are getting higher and higher and higher, it's showing buyer strength getting what? Stronger and stronger and stronger. This is how we are essentially gauging the sentiment of the market. How we can look at this and say, oh my goodness, these buyers are wiping out almost 70% of the initial move we just got here. Does that sound like weakness or strength to you if you're looking at what the buyers are doing right now, right? Sounds like strength, right? 70% out of a 100% high to low move. We're looking at some buyers really gain some strength here. So it starts to give us an idea that, maybe we're going to start seeing more of an uptrend. We can start to use this to navigate through and figure out where's the best places for us to enter our next trades. Now, with this information that we have, I want you guys to notice one thing really quickly about this. Notice these blue lines here at the bottoms and these blue lines at the top. These represent potential supply and demand zones. Potential supply and demand zones, okay? I'm going to break this down further as we go. Now, as we move up higher, you see we got these two white lines right here. These are very powerful. They tell us that if nothing closes above this 382, this shows us that the actual sellers that initiated this downtrend are still extremely strong and that we can look to see more sell momentum afterwards, okay? Because notice if the buyers are moving up 12%, 23, 38, and then they just get stopped here, and then we start seeing another big pushback down again, and we make a lower low. So if it looks something like this, all right, and price breaks down and makes a lower low, that is a very, very strong sign that the sellers are going to continue to drop off. All right. Hold on, let me see here. I want to make sure I'm answering questions as I'm going through. I know you guys are like talking it up right now in the session. Tino said I'm sipping Kool-Aid right now. Oh my goodness. All right, Christina says, session so lit. Please ask questions. Totally agree. My jaw on the floor watching our tech come to pass a couple days later. I try to tell you guys everything I'm sharing with you is literally the next day, the next hour. You can use this information to make money. Period. This is not one of those, well, you give it a couple months. No, listen, you can take, if you understand what I'm saying and you start watching the recordings and doubling back and back testing and implementing, you will use this and see results. This is one of those things where I am that confident in the methods that I share with you guys. All right. My brain shut down when I see the fibs. Oh no, don't get shut down, Abraham. That's the thing. Like, you gotta keep yourself open to the opportunities that this tool brings to you, right? Because when I first started using fibs, I'm not even gonna hold you guys up. I instantly did not want to use Fibonacci. When the moment somebody sat down with me and said, "Oh, you got to hear about Fib," listen, I looked at that stuff and said, "Look, if I can't spell it, I ain't using it." Period. FOBO, fabulous, whatever his name is. If he rapping, I don't leave him on my chart. They was like, "No, it's Fibonacci, not Fibonacci." I'm like, I don't care what it is, I ain't using it. All them colors, I can't get with them. I don't know what either one of these colors do. I don't know what none of these lines and numbers mean, and I just gave up on it. I didn't even give it a shot. When I got out of my own way, guys, let me say that real slow. When I got out of my own way, everything just opened up. It was like the Red Sea just opened up. I was like, whoa, that makes sense. That clicks. Because when we're talking about high frequency trading bots, right, HFT, and we start seeing high frequency trading bots trigger orders in certain zones, and now we can look and figure out where the orders are being triggered based on what Fibonacci is telling us, because guess what's coded into those complex algorithms is Fibonacci. Oh, okay. So now we're walking. We're on a journey now. All right. See, I just don't understand the lines and what they mean. I'm about to break it down for you. All right. So remember what I just said. 382, right? And 236 are very powerful zones that if price comes up to these areas, oh, can't even grab my little tool here. Price comes up to these areas here, 382 or 236, this will start to give you an idea that, hey, the sellers are absolutely in control. I need to look at this area and look for an area to enter after we make a lower low. Okay, so keep that in mind. We won't enter here. These two areas from 382 and 236, if price comes up to this area here, right? Let me just move this thing around a little bit. If price comes up to 382, or I'm sorry, 236, and then turns around and makes a lower low, right? Closes lower. Let me just put a little line here so you know what I mean when I say lower low. All right. Price comes down to this area, boom, makes a lower low. We don't enter here. We'll take a market execution on this position because we've had the sign that the sellers are in control. The sellers are dominant. Price could not even make a push past 236 and dropped off. These are white hot zones for the continuation. All right. Remember that when you're looking at fibs. 382, 236 are white hot zones for a continuation, right? And all my settings I have here, I'm going to share with you guys. You'll absolutely have them before the session is over with. Your fibs will look just like mine once we're done tonight. All right. If we move up to the 382, same result. We won't take a trade here. We're looking to see price break below this zone and we'll market execute. And I'll show you how we'll look for our take profit after we break below here. It's all simplistic, straightforward stuff, guys. Nothing hard. Okay. Now from here, right, we got the understanding of what 236, 382. Also, one more thing with the 236, which is very important. If price has not pushed up past this 236, our fib technically has not even been activated. So even though we got a high point, we got a low point, price is pushing up a little bit. If we can't even close on the other side of 236, this fib doesn't even exist. And this saves you from even drawing a fib over and over and over. Because I got people sometimes, they'll see prices dropping down and they'll have a high point and they'll just keep moving their fib every single candle over and over and over and over. And I'm like, why are you chasing every candle? Wait for price to pull back and at least break your 236 so that you know you actually have an active retracement, an active fib. Now you can use it and draw out all the other things we need to draw out. So moving forward, right? 382, 236, white hot zones for a continuation. Really strong zones after this lower low is made. From here, if price pulls up to our 50% or 618 zone, this area here is when we start getting into the HFT playground, right? We start talking about high frequency trading bots. This zone here is what we like to box up from 618 to 50%. We call this the sweet spot zone. All right, you're going to hear me say sweet spot zone a whole lot in our sessions, but this is what I'm talking about. I call this the sweet spot zone because when I go back and I break this down and I show you how consistent the market respects this area, you are going to lose it. He says, can you help edit the fib on MT4? Yeah, so MT4 is pretty much the same kind of deal. You just won't get the same kind of colors that I have here, but it's no different. You can put the same levels. I'll drop the levels and stuff on the chart for you guys so you guys will see everything. Once you screenshot it, you'll just go to MT4, go to edit, and then you can put all the, or was it properties on MT4? I don't even have MT4 on this computer right now. I don't know why I haven't downloaded it yet. I've been using my laptop and my phone. I haven't used, this is like my teaching setup over here. So I haven't put anything extra on this bad boy yet if it had nothing to do with crypto. But I'm gonna add it on here probably this week and get it all set up. I prefer my phone so much because I'm on the go. But yeah. So right now, this right here, this level is very powerful when it comes to high frequency trading bots, understanding that these levels trigger a lot of reversals. The percentages of you getting areas like this triggered are crazy strong. Okay. Outrageously strong. So keep this in mind. This is typically the area where we're going to enter our trade. This is why it's green. And we have the gold area here for the golden ratio, 618. You hear that all the time. 618 is the golden ratio. It's amazing. It's awesome. Price likes to respect it all the time. It's a big deal, right? It's kind of a big deal. It's like Will Ferrell. So, I mean, people laughing at me on the other side of the... So, when we go up here to the 886 or 786, 886 zone, all right, we're not going to use the 835 at the moment. I just want to make sure you guys are noticing 786 and 886, okay? Just keep that in mind right now. That's very, very important. What you want to do after you get your sweet spot zone marked up is you're going to use this area here from 786 to 886, and this is going to give you your area of supply. When I tell you guys, and listen, you can say whatever you want to say inside of the chat if you've been using this or not, because I love the testimonies. But listen, when you guys start using fibs on your charts and you mark up the 786 and the 886, you are going to be absolutely amazed how price reacts to this zone as a potential area of supply. This helps anybody who's brand new and has a hard time drawing out supply and demand zones. I am going to simplify supply and demand for you in one session. You hear me? One session. After this, you will be able to draw out supply and demand zones like an absolute pro. And when I say price is going to get to that level and you're going to see a reaction from the candles, you are going to lose it. Like I said, your whole lace front, ladies, in the driveway. All right. So when we're getting into these zones, this is how the markup's going to typically look. We're going to get a swing high, swing low. We're going to find our 50% 618 zone. We're going to box this area up. We're going to look for a 786, 886. We're going to drop our vertical lines here, right? Or I'm sorry, our horizontal lines here. And now this zone here, this whole blocked out zone here is going to be our area of supply because supply is at the top. Now, I want you guys to notice what I'm about to do here. Let's say price hits this area, right? And starts to drop down. If we got something like this, right? Price hits our zone, we got activated, price is dropping, our trade's already looking good, we're in profit. This method that I'm sharing with you is going to remove the bias that you run into as a trader. What do you mean, Curtis? How is it going to remove my bias? A lot of times when we get into a trade, right, and our trade goes in profit, the first thing, because you guys are going to laugh when I do this, the first thing that pops up is what? That happiness, right? Your heartbeat, your heart rate goes up. You get that sense of, oh my gosh, I'm getting it. It's working. Oh my goodness, I'm going to be rich. You think about all the good stuff you're going to do, right? Your mind starts traveling, and all of a sudden you get distracted with profits. You're not managing the trade properly. You're not looking at what's supposed to happen next in your thought process. You don't even know the zones where you should be moving your stop loss into profit because you're so busy being happy, right? And we know the rules. Emotions have no business being in your trading, right? If you're riding an emotional high, guess what else you'll ride? An emotional low. So with what I've just done here, going from high point to low point, and I'm getting my sweet spot zone here for the sellers, and I'm getting my potential supply zone here, I can do the exact same scenario for this now. And I want to show you how this works. All right. So if I go from low point here to high point here, right? And now this is called a devil's advocate position because now we're in profit. That's great. But we're going to remove the bias, right? Because now that mental conversation you're having about, should I stay in? Oh my goodness, should I get out? Oh my God, how far is this going to go? Should I move my stop loss yet? Is it going to pull back? All of that starts to creep in and you don't know what to do next. You're running into issues. You're uncertain. Things are kind of scaring you right now. Like, how should I manage this? Notice what I'm about to show you guys, right? Just how we got our setup here. We're going to do the same thing here in reverse, because now even in reverse, the high frequency trading bots, the algorithms, they trigger even on a fractal scale. On a smaller move, you'll get the same kind of reactions from price. And I want to show you what I mean. So just how we got high to low, sweet spot zone, area of supply. We're going to go low to high, and we're going to box up this zone here for potential buyer momentum at 50%, 618 right in this area. Also, we're going to box up 786 here and 886 right here as an area of demand. So now when we remove our fib here, this is what our setup's going to look like. Let me move this line down here. We're just using that for example. So now this is what our setups are going to typically look like. All right. Mitchell says, sorry, I came late. How do you get the ABC on the fibs? ABCD on the fibs? We don't use ABCD on the fibs. This was just an example right here. This isn't like something we're doing all the time with fibs. This is just a quick little example before I go to the actual chart, Mitchell. So you didn't miss much. This is just breaking down from high point to low point, how we draw the fib and find our initial zone here for a sell and our area here for supply. And essentially, this is our first line of defense where we're looking to get our sell field. And then this is our last line of defense, looking to see if there's any sellers left within this area. Okay. Now from here, same thing. As we're moving down, we're in profit from this move. We remove the bias. Let me just zoom in here a little bit. We remove the bias from this entire setup because as price is dropping, you're excited, but now you have an area that once price hits this zone, you can now do what with your stop loss? You can take your stop loss, move that bad boy in profit, right? This is our potential stop loss here. So let's say if stop loss was back here somewhere, right? You'll move it into profit now because we're in a zone where, based on high frequency trading, based on algorithmic movement, we know that this is a potential zone where the buyers will show up. And if they don't, and the sellers push right through here, this is the last line of defense for the buyers at this area of demand. Now I'm going to go to the chart and I'm going to show you live examples. Now I want you to pay attention to this because I'm going to show you this on Bitcoin. This is the thing that everybody says is the most random, no structure, stay away from it, hide your kids, hide your wife, pair on the planet. Like, don't trade Bitcoin USD if you love your life. But I'm going to break this down for you guys so you will never be afraid of crypto or Bitcoin ever again. Okay, so what I'm going to do is I'm going to go back, way back here when Bitcoin was at its worst, right? 2018. No way anybody made any money in 2018. That would be absolutely crazy. All right, we had this large run up 2017. We got to about 19,000, and then we had a big drop off in price. When price got to this area, I just want to go through this example. So when I go through the actual recent price action, you'll see what I mean when I show you that Bitcoin follows these levels and it respects these zones over and over and over again. Now, what I want to do is I just want to take this high point here. All right, take my Fibonacci retracement tool from here. And I want to go down to the swing low right here. Now, what I just did here was absolutely wrong, by the way. Just so you know, it was wrong. Because if I did this, that means that this point here would be my lowest point, not this point. And I want to kind of spread it. So now don't get me wrong, if I was using this as my initial move when price pulled up into this area here, guess what we got? 50%, 618. Guess what gets triggered in that area? High frequency trading bots, algorithms are triggered. 50%, 618, area for sale. But this is not my low because price pulls back up and it makes a lower low right here. And I want to kind of zoom in on this so you guys can see everything I'm doing here. Let me go to the IMAX chart. All right, I call it the IMAX chart because you go to the IMAX theater. That boy is huge. It's like no borders. Now, from here, swing high, down to low, price pulls up, drops down. This is a lower low than this. Just because this wick has moved down does not mean this is lower than this. Price has closed. Remember what we talk about when candles close, price has closed lower than this candle. Meaning our fib would have to be connected to this candle and the wick, not the body, but the wick. So we're going highest point, connect the wick, down to lowest point with the wick, right? We're using the wicks of the bodies of the candles that are making the lower lows, right? This candle closed lower than that candle. Do not be seduced by wicks, all right? So from here, when price pulled back up from this point, my 50% 618 zone was here, right? This is the area I'm looking at, take a sell. Price pushes up into the zone just slightly, turns around, boom, we get the drop off, right? Very nice. Awesome sauce. All right. Now, let me delete this. From here, let's do it again, guys. Let's just swing high, swing low, right? Let's take this high point down to the low point here, right? And a lot of people ask me like, hey, Kurt, why wouldn't you use the low from this candle since it's bearish? And you're using the low from this candle with this bullish candle with a large wick on it. Is that valid? This is absolutely still valid because these areas where price has dropped here and this candle kind of pushed down because the sell momentum was still within this candle. When this candle began, the sell momentum from this candle still traveled through this one and then finally pulled back up to create some more upwards movement. So this is still valid. As long as these levels are equal, you're fine. You can use the wicks from this one or this one. It won't make a big difference. All right. Now from here, I'm going to box this up again, 50%, 618, right around here, right? Let's just keep that going. So now, oh my goodness. Oh my god. Wicks, right? It's no way we were able to take profitable trades like this simple on Bitcoin in 2018. When everybody was saying, oh, 2018 is the worst year ever. Bitcoin's dropping off. Nobody's making any money. Okay, wait a minute. What do we got here again? It's no way it's going to let us do this 3 times in a row. From swing high, down to swing low. Notice where I'm putting my low, right? I'm connecting low to high, but I'm going left to right, high to low. How low can we go? We're looking for a sale here. So 50% 618 zone, boxing it up. Come on, you guys. Tell me y'all seeing it. Tell me somebody's seeing it, right? Is it making sense to somebody yet? 50% 618 zone right in here, right? You can get in here and figure this is the area we're looking to take our sales in within this zone. Okay, let me go ahead and just remove it again. It's no way we're going to get away with it. Okay, wait a minute. What's going on here? We're dropping, so we got a high point, a low point, price pulling back up. No way we're gonna get away with it 4 times in a row. This is 2018. There was no money being made in 2018, right? Like nobody got paid off of Bitcoin in 2018. There's no way possible. Are you serious right now? 50%, 618 zone. Are you seeing how price is respecting these levels? Right? Breaks into this area, nothing but wicks, pulls back in, and then finally breaks through. Okay. Tino says, I see it. Mark says, where do we enter a sale at the 50 or the 618? Where is the stop loss initially? So, great question. Now, essentially, when we're doing this, this is a daily time frame, by the way, but I'm just showing you guys just to show you how consistent it is on different time frames. But what we're typically doing is we're entering these trades with 1% of our account at 50% and 1% of our account at 618. So we'll have an order waiting here, and our stop loss goes just on the other side of 786 over here at the 835 zone with this purple line. Okay. Now, what I suggest if you're trading on MT4, there's a different setup that I like to kind of tell you guys about, because if you're doing this on an exchange, you can handle this kind of movement. It won't be the end of the world for you. But if you're on MT4, it's very different, because like I said, what I do here is I break down things for the exchange side, non-leverage. When you're trading leverage, your stop loss has to be a little closer. And if you have a smaller account, something like $700 to $1,000, and you're trading crypto on MT4, which I strongly suggest that's your minimal amount. Like, do not, trade anything. Don't have a $500 account trying to trade Bitcoin. It's too scary. Bitcoin can move $1,000 in like a day. Like that, you don't want to be on the wrong side of that with a $500 account. So having something like this, make sure your stop loss is like just on the other side of the 618. And my thing is, I would rather you get stopped out early in a trade and then, wait for price to pull back into your zone and then have that confidence to enter for maybe a sell stop just below the zone. As price is leaving, it just takes you with it as it drops out. Right. So things like that are amazing. There are awesome strategies that you can use with your orders and kind of, play around with it, with the way you can enter these positions. But please know what I'm showing you guys is outrageously consistent inside of cryptocurrency. Now, I'm just going to move forward a little bit and see if we're going to get any more examples. Oh, my goodness. We got a high point and low. It's no way this is happening again. Right. Let's take our high point here down to the low. And notice what I'm not being seduced by wicks. I'm using the lowest point. This candle closed lower than anything here, using the wick of that candle, 50%, 618 zone. Right, let's box this up. 618, 50%. Algorithms are triggered. What do we get? Drop off. Okay, so or we just sell BTC we own. And that's the thing, like if you're selling BTC that you own, you can't do that on the non-leverage side. Right, you're going to simply just buy positions, and you're going to be able to enter and exit those on the exchanges with just buying and then getting into a stable coin, which is what I talk about a lot when we're on, the Wednesday session. If this is your first time here and you're like, man, how do I use some of this stuff getting in and out of these exchanges? He said, exchange besides Bitfinex allows short selling. Do you? Yeah, I don't do any leverage on the exchanges. Like I don't do any kind of like a short selling on like Bitfinex or BitMEX or Bybit. I don't do any of that. I'll simply take my, leverage style trades on for crypto on my broker account. I'll use MT4 for that. I don't want to go back and find another website to do all of that stuff and making something simple super complicated. You want to keep it easy. We're already Forex traders. Most of our brokers already allow crypto trading. Why would I want to go make a new account when I can just do it here where I already have money and I can already withdraw? Simplistic, right? Don't make it harder than what it is. So for me, you won't see me using like Bitfinex and Bybit and BitMEX and all of that stuff. I steer clear of all of those different websites. And plus, with the US, they're regulating those sites like crazy, and most of those sites can't allow US customers. So you just don't want to get caught on the wrong side of that stuff either. Having accounts on certain type of exchanges that are already going to kind of have issues, and that's one of the reasons why I like to make sure any kind of exchange that I do bring to you guys, it won't cause any friction moving forward based on the US laws that we have right now and the laws that have been already implemented, and then ones that are future proofing themselves, so you guys won't have to worry about something like Coinbase running into issues because it's already built for US customers. All right. And I give you guys some workarounds too to like find different ways to get coins that Coinbase doesn't have and things like that. There's a bunch of different things I show you on Wednesdays that allow you to get involved with certain projects that you won't have access to, if you don't have any kind of overseas account. But I got ways for that. We got all, it's always a way. Right? It's legit. It's not nothing crazy you got to do. O'Neill says, not sure if you answered this, bro. Market executions, do you jump in after the closed candle? Yes, always. I never make decisions on live candles. I always make decisions on closed Candles. Always, always, always. Great question, by the way, too, O'Neal. He say Randy. Oh, Randy says, what's going on, Manny? Oh, we got the Splash Brothers together, Manny and Randy. When them two get together, it's a wrap. Splash Brothers and them Cardano brothers right there. All right, so check it out, guys. We've gone through how many examples so far? 1, 2, 3, 4, 5. It's no way. It's no way you guys aren't seeing this right now. Let me get this together. Wait, one more example. Let's see what we can get from this one, right? Let's just try one more to see what happens. We got swing high down to low, right? Using this low here. I'm just dragging it out a little further. And if I took this zone right here, come on, 50%, 618 straight across, really? And then we get the drop up. So let me get this straight. In 2018, where nobody made money, we had 1, 2, 3, 4, 5, 6 opportunities where the algorithms triggered over and over and over and over and over. O'Neal says I'm in Cardano also. Oh, please don't be Draymond Green and they Splash Brothers, because they already come in here getting on my head about Cardano every week, every single time, man. But it's all love, though. I know them dudes. They good people, man. He say just a sponge soaking up knowledge right now. I feel you, Randy, man. I appreciate you too. He say what time candles for buy sell trigger. I typically use the 4-hour time frame, Mark. So I keep things simplistic. I like to use the 4-hour. When you're dealing with crypto with such a fast asset, when you're working on lower time frames like the hour, the half hour, the 15 minute, it is ridiculous like how fast this market moves. If you're on anything lower than the 4-hour, you will definitely run into some walls. All right. Oh my goodness, you already rooting on 88. Let's go. Oh man. All right, guys. So check this out. We had, what is it, 6 different opportunities with the algorithms triggering, right? And I know you guys are probably saying, well, yeah, that's probably one case, Kurt. Like price dropped down. Yeah, big whoop. What about down here when price was down here bottoming around? Well, how could we have used fibs for that? I'm glad you asked. Let's go ahead and get into that real quick. I'm going to go to a lower time frame real quick, and then I'm going to work ourselves to the more recent information because I want you guys to really see why all of this stuff I'm showing you is relevant and how this will benefit you moving forward. All right. Now, yeah, we're on a 4-hour right now. You say 4-hour it is. Anybody shield? Raven coin. Nah, Raven coin's not bad. I know what they're doing with the project. They're working on some things with like cross border, so not cross border, but cross blockchain solutions and things like that. So Raven coin's not bad. They actually are a nice coin, a nice project. Everybody's got their favorites, man. I like the fact that you guys are like loyal to your coins though, but be careful right now in this new season of altcoin because this is not 2017. We will not see the same type of adoption we saw in 2017 and 2019. This is a different type of energy, right? We got institutional players coming in, and right now the focus is accumulating Bitcoin. They're not trying to get ETH. They're not trying to get Ripple. They're not trying to get anything else right now but Bitcoin. All right. O'Neal, I thought I answered that one, O'Neal. Yeah, I'm always entering on the closed candles for market executions. Always closed candles. You say zone, 7-8, the 886 zone or over previous highs. No, if something closes inside of my, supplier demand zone, I have to be more patient. If price closes right at the zone and doesn't like if I get a wick and then price closes outside of the supply zone or outside of the demand zone, then I'll look at those as potential market executions. Or if I have a lower low after prices hit maybe a 236 or a 382 and I drop down, now I'm looking at that as a market execution zone as well after the candle is closed. That's made the lower low or higher high, whatever. And I'll get into the examples. So right now we're talking about after prices dropped off substantially and we're in this zone and price is bouncing up. Let me show you guys something real quick. And hopefully this kind of brings everything full circle after all the examples I've given. All right. So we're going to go from low to high right about here. Let me refresh this real quick because it is looking all wacky. Here we go. Okay, so we've gone from low to high. Prices pulled down 50%, 618. We box this bad boy up. Now, mind you, how have I just drawn this fib, right? I've gone from low point to high point, from left to right. All I'm doing is going from this low all the way up to this high. And as price pulls back down from here, I want to see how it reacts to in my 50% 618 zone. So from low to high, the rule is we're looking for a buy. I ended my fib to the upside. I'm looking for a buy opportunity. Here we go. Boom, boom. Box that bad boy up like Chinese takeout. And now you guys can see what I mean here. when I talk about how consistent this is. Let me just pull this all the way over so you guys can see what I mean. So price pulls up to my zone, bounces off of it, pushes up to the upside, and now I'm also going to box up my area right here, 786, 886, as my potential area of demand, right around here. Right, and you guys already see how price reacted to it. We'll get into that in a second. I want to show you guys how we also do the devil's advocate scenario. Now, here's the deal. I've entered this trade, right? I'm looking good. Price is moving in my favor. I'm excited, but I want to remove the bias. I don't want to think this is the best buy I've ever seen in my life. I want to have a reference to gauge what am I looking at and why am I looking at it this way, right? So just how I went from low to high and I got my sweet spot zone and my area of demand, I can do the same thing in reverse from high to low, right? High point here to my lowest point here. And notice what we got. If we look at this in a different light, I'm removing the bias. I'm looking at where is my first zone that I can look to see the seller show up. 50%, 618 zone right here. Notice what happens. Sellers get rejected. Price pulls up, pushes back up again. Sellers get rejected. Sellers get pushed right back down into the zone, bounce off of my area again. And finally, we get a big candle pushing to the upside. But this is my first line of defense. Where's my last line of defense? 786, 886. Boom. Area of supply at this area here. Okay. Now, this is what I'm talking about when I break down how you can take this information and utilize it over and over and over. And notice where you see the price levels, right? Everything's bouncing around. Remember, I just showed you guys the example up above, how our examples are typically going to look. I don't know if I erased it already. I got rid of it already. But notice how I said our examples are going to look typically the same all the time, where we're going to box price in, and then we're going to make sure that we take all the information and use it the right way. Now, if you're getting some value from this so far and things are starting to click a little bit, let me get a 333 in the chat if you're seeing what I'm going at here. Every time we can take this information and just utilize it over and over and over and box price in. Now, from here, notice what happens. I'm in my buy. Price comes up to this area. I take the majority of my trade off the table. And then I do what with my stop loss? I move it into profit. So now if something comes back and stops me out, I'm fine with that. All right. This is when you enter a trade. Generally, do you have, oh man, a lot of threes popped up. Do you have days? I'm trying to read it. It's got a lot of people in 333 right now. When you enter a trade, generally, how many days are you active or only hours? So yeah, it really just depends. It really just depends. Now, this is still a 4-hour time frame. If I'm entering here, price has moved up, right? This is 4 hours, 8 hours, and I'm already out. Essentially, most of my trade is off the table here. Right? I take the majority of my positions off the table pretty early. So let's say I've entered this for a standard, right? Let's just argument's sake say I have a $10 per pip position in. Price comes up to this area. I'm taking 7 of that off the table. I'm only leaving $3 per pip in the market. Okay? So things start to make more sense. It says 333. Could this mean drew my fibs wrong? 2 sweet spot zones, buy, sell, or cross through one another. So sometimes when the market's making a consolidating range, high and low like that, you'll have overlapping fibs. But the thing is, you don't want to start looking for fibs in a consolidating market. And that's what I was getting to, where this is amazing. This is like Fibonacci is an amazing tool to use, but it's only really utilized, or it works at its very best. Let me put it that way. It works its very best in a trending market. Now, in a consolidating market, we can still use these methods of swing low to swing high, marking up our zones here for demand, marking up our first sweet spot zone, and then swing high to swing low, and having our area of supply here. This is useful because until something breaks these zones, we can trade these levels for sales and buys consistently until we get a break of one of these areas. All right. It keeps things so simplistic moving forward. And just notice what we got here. Like, just, I really want you to see how price is reacting to this. All right. Price gets back to our area of demand down here, and buyers show up. Let me remove this real quick. Gets this area down here. Buyers show up, right? Boom. Pushes price back higher. We get a slight break below. Pushes price back higher. We get area back up here. What happens? Sellers show up, right? Pushes price back down. Right? Comes back to this area. And the moment we get back to this area, notice where the takeoff took place. We broke into this zone, and the large candle broke us from this area. All right. I know you guys are probably saying, like, man, Kurt, that's crazy. How would I have been able to take that trade? This kind of movement here, we can't gauge that. All right, this is absolutely ludicrous. This is emotional. All right, we don't get this kind of movement typically over and over and over in the market. So when something like this happens, if you weren't already in a trade potentially, then you're going to miss that move. And like I said before, if something's doing this, right, we made a movement down to the low side and to the high side. Guess what would have happened? And I'm just going to make it real quick for you guys so you can see it. Swing low to swing high. All right, where is our zone that we're looking to set our sweet spot in, right? 50%, 618, right? And how we ended our fib, we went from low to high. We're looking for a buy. So 50% to 618 is the area you were looking to buy in. This is what I say when I talk about how repetitive the markets are. This is Bitcoin, the most random thing on the planet, right? There's no structure here. How dare you trade Bitcoin? This is what I'm trying to share with you guys, where you can trade this with absolute confidence using these methods, looking at the structure, seeing what type of candles you're getting within these zones, and just utilizing it over and over and over. Using proper risk management, everything starts to line up and speak to you in a very simplistic manner, right? We're not in here going crazy, carrying the one, adding two, doubling back, taking our shoes off and counting the little toes. We're just looking at this saying, okay, I got an algorithm that's moving through here. Price keeps making lows and highs. All I have to do is go from low point, high point, draw up my fib. And when you look left, you have all that structure that price is just resting on now from a previous zone. Okay, like don't get me going on like certain areas of structure, but I want to make sure I can kind of simplistically work us through this. Now, let me go back here. O'Neill says insane. T Scott says V or pips is same regardless of the time frame. No. So the deal is, if I'm on the 4 hour, right, these movements are going to be much more, I guess it's not sustainable as it is. You can handle this kind of movement with a certain size of account. If you're on MT4, if you're trading on the non-leverage side, like I talk about all the time, if you're on Coinbase Pro, you can handle this with a $50 account. You can handle this with a $20 account. It doesn't matter the amount of money you have with non-leverage, because you're simply trading the money you have, right? So if price, drops down 5%, then you've lost 5% of your $20 or $50 or whatever it may be. If price moves up 10% or 15%, then you've made 10 or 15% on your $50. So let's say you got a $50 account, price moves up 10%, boom, you make $5, right? Price moves up, 20%, boom, you made $10, right? You get to the point where things start to click a little bit more when you have that smaller account on a non-leverage side, as opposed to being on MT4 where you're working off of pips and it's a lot of movement. You got to keep track of what the leverage is and how much money you have in your account, your margin. So I want to make sure you guys know that if you're going to trade Bitcoin on MT4, what's going on, Kendrick? Please make sure you have a minimum of $700 to $1,000. And when I say 700 to 1,000, like the moment you dip below 700, put some more money back in. Just do not force it. Do not get to the point where you're just pushing and pushing and pushing and your account may be getting lower and you're taking bad entries, right? Make sure you have a sound strategy to trade cryptocurrency, or you're using Swipecoin with the proper risk management. All right. And speaking of Swipecoin, boom, O'Neill just typed it in there. Beautiful. He says, so Swipecoin called a sale on BTC. And after it hit my stop loss, I just marked the chart with your trading technique, and call made fell right by the buy sweet spot zone, shaking my head. And this is the thing, like, you can see the zones, like everything's lining up right where it needs to be. I want to make sure you guys are confident in what you do. He said, which proves your technique is boss. Man, listen, it speaks for itself. This thing literally sells itself. It's like a ShamWow. All right. So just making sure you guys are seeing where I'm going with this. Now, as price is moving through, boom, we get the breakout. How do you manage the breakout, right? Like, okay, Kurt, price is doing this. How do I trade this? Well, I already said fibs work great in what? A trending market. I cannot mark up this low to this high, but guess what I got here? Price moved up, high, low, higher, high. Uh-oh. I can use that. I can go from this low point here to this high point here, right? And then guess what I get to do? Box up my 786 zone right there, and my 886 zone right here. Oh. Alrighty. And now, same thing here. Put my 50% 618 zone together for my potential buy right here. And notice what's happening here in this zone, right? I want you to really see how this looks. Even if it's ugly, I want you to notice the type of movement we're getting from here right now. All right, remove. Now, from here, let me refresh this because I got this thing all wacky again. There we go. Notice how price as low to high, came down to my zone, broke below my sweet spot zone, but tested what? My area of demand, pushed back up, broke above again, came back, retested demand, broke above my zone. Now I want to do this in front of you so you know what I'm doing here. I'm going to take this information from high point to my lowest point. Is this my lowest point here? These candles over here closed lower than these candles now, so I would have to reevaluate this as my lowest point. Okay, so boom, it's my lowest point. Now check it out, same thing I've been doing, guys, just boxing up the zones, keeping everything simplistic. All right, 786, 886, and I want you to see, because I want to kind of move faster a little bit so we can get to the more recent areas of the chart. Notice how price is reacting to our zone now, right? Price is testing, testing, and finally, boom, break out to the upside, and then we pull back down again. When we broke out to the upside, price is testing our area of support. We got a big dip back down and a pull back higher. I wonder what I can do with that. I can take this low to this high now. You guys see where I'm going with this, how simplistic the movement is, how the market keeps showing you what you need to do over and over and over again once you get a low to a high. Remember I said, if I'm going low point to high point, this is my highest point here. None of these wicks are going to seduce me. I'm using the wicks of the candles that close at the highest point, right? So that area there. And now, same thing, 50%, 618, looking for the buy. Bring this thing down, it's way up there. All right, 50%, 618. Here's my area for the buy. Also, my new area of demand, 786, 886. And let me just remove that for a second. Boom. Wicks. Respecting. Okay? You seeing where I'm going with this? And now let's reevaluate our last zone from high point here to low point here. I'm doing this and being repetitive because I really want you to see how if you keep the same thought process with this and you don't let your emotions kick in, you don't let the impatience kick in, how much you see that the candles are actually communicating with you with this method, right? Price has made a high, pushed down, tested our area of demand, pushed back above, and it tested our area, broke out of our area, retested, and then took off. Does any of this look like something you could have traded and made money with? Let me go back here. It says, how do you calculate Bitcoin pips? So Bitcoin's pips aren't really pips. It's called Satoshi because the creator of Bitcoin's name is Satoshi Nakamoto. So Bitcoin doesn't work off of actual pips. It works off of something called Satoshi. So when you start seeing the value of Bitcoin, let me just kind of flash this on the screen for you guys real quick. When you start seeing the value of Bitcoin and you start getting into like fractions of a fraction of a Bitcoin, you start seeing things like this over here. Like if I went to, let's just say, I don't know, like 20, right? 20 Bitcoin, right? $20 worth of Bitcoin. That wouldn't even be a full Bitcoin. Obviously, we're looking at, 0.001976 something of the value of one Bitcoin. And this is just 0.0197617 Satoshi, right? So we're talking about over 197,000 Satoshi, right? So I'm like so far behind the value of a Bitcoin that I'm in a fraction of a Bitcoin, not even like 1 cent of a Bitcoin. I'm underneath that. So when you think about pips, don't try to correlate, cryptocurrency with Forex values because we're dealing with two completely different markets. All right. O'Neill says, Mark says, Sensei, do you still use Discord message board to manage trades? No, I haven't been using Discord for a while now. I got away from it. I built like a really nice Discord too, and I just got away from it. I might do it again and reiterate it, and kind of put you guys into that world because I can do a lot of things with Discord, but I'll think about it. I got it because it requires more of my time if I put that together. O'Neill says a red candle, a green candle are neck and neck, but the wick is higher from the or is higher from the. Yeah, it doesn't really matter as long as if they're neck and neck, you just take the wick that's longer. It's fine. Do you mark the fair from the green? Yeah, it doesn't really matter, or Neil. It's one of those situations where it's really your call, but that area is really like one of those zones where you don't have to be super crazy. In those areas, you can just pick and choose. As long as you just have it on a wick, you'll be fine. Yeah, it's a great question. I get that question a lot, by the way. Lauren says, "Hey Kurt, what do you look for to know, say, full trend reversal as opposed to just a retracement?" That is a really good question. I cannot wait to answer that one. I'm gonna get to that right now. I'm gonna answer your question in a second after I get to Lawrence's question. So let's say we're looking at something pull back, right? And I'm trying to make sure I'm not looking at a full reversal. The thing about understanding, trend strength is as traders, we want to get into this mindset that we want to be right a lot. Okay. And that was one of the things I had an issue with because, you learn all of this stuff. You watch all of the IML sessions, you go to all of the classes, you go to all of the meetings, you go to the conferences, you're flying out. You're like, man, I'm going to get this, right? You telling yourself, I'm ready. I'm going to implement this. I'm going to master this skill. And you think in mastering it, you have to be right all the time. That's the problem because the moment you try to be perfect, you're going to fail. Period. I'm being 100 with you. This is why y'all come to me. I'm going to be transparent. I'm not going to sugarcoat it. I'm not going to give you a real nice peanut butter and jelly sandwich made with the knife like on the commercial. I'm bringing out the spoon. I'm slapping it on there and we slather it. I'm telling you the truth. If you try to be perfect, you're going to fail. Understand that when we're looking at a trend and we're trying to figure out if it's a full reversal or if it's just a retracement, we have to trade it in small increments. And this is one of the reasons why I'm going through this and breaking this down for you guys. I'm going to back up just a little bit to kind of answer that question, Lawrence, so you can see what I mean. Right here in this little example right here is perfect. From this low to this high, price pulled down 50% into our just below 50%, but just above 618, right in our wheelhouse for our sweet spot zone. Pull back up to the upside. When it got here, it could have instantly hit this area and then algorithm could have triggered it to drop off even lower because we just got done with this movement, right? But price came back to this zone, bounced around for a while, pushed back up. My thing is this, I do not care if it's going to be a full reversal or a full, extension and we're going to have a higher high and higher low. My job is to make sure that I'm managing this trade through every one of these steps. Step one, I've entered the trade, I'm in profit. Step two, we've hit our zone here. I'm looking to move my stop loss in profit and take the majority of my trade off the table because I know this is the first area that I will run into opposition. This is the thing I like to share with you guys when I talk about this. How powerful is it to know you can look at the very first zone that you can see the sellers show up? You have a gauge to say, if the sellers are going to show up, it's going to be here. If the buyers are going to show up, it's going to be here. If they break through here, I have an answer of the next zone. I can see a potential reversal or a slowdown for my trade, which is here, right? And you get that area price, tested this area, pulled back down, tested it again, but then kept making a higher low. And all of a sudden, boom, we got a breakout candle and slows down right in our area up here. All right, that's not by mistake. You got the algorithms triggering. He says, so when you enter, it hits the 618. So here's the deal. Like when price is hitting my zones, it's communicating strength of price as well. If nothing comes down to this 618 zone, that's a strong trend. And I'll go ahead and just give you guys an example of what I mean when I talk about it. It's giving me examples like right here. This is a great idea, a great example of what I'm talking about. When fibs are making a big move up, right? And we pull down to 382, what does that say? Strong trend, right? We're going down to 50%. It's a nice normal trend, right? Means we can get a nice little bit of a pullback, retest, take off, things like that. Reason why I talked about that 382 being a strong trend earlier is we don't enter here because we don't know if price is going to continue moving lower, but we do know based on it being a strong trend, if price can only pull to this area, after we make that higher high, that gives us the idea that, hey, I can take a market execution from here because I know this is a stronger movement. The probabilities of the market continuing to the upside are much greater now in my favor. I can wait for an answer of a higher high and now take that chance for price to continue moving in my favor to the upside. All right. And I'm going to give you examples of where we're going to exit in a moment. I just want to make sure I'm really, breaking down this retracement tool, because once we get into the extension side of things, we want to go full circle with how fibs work and how we're going to start laying out these charts. And when I'm dropping things in our Telegram, you'll be able to see what I mean. Now, if something drops down to my 618 zone, it's a weaker trend. And if it breaks all the way down to the 100%, then that's a reversal sign, right? That shows me that this entire move that has now happened, the sellers have officially came back and wiped out everything that the buyers have done. This is no longer a retracement. This is a reversal now. So hopefully that's answering your question too. By the way, when you were asking that one question for a second, Lawrence, I want to make sure I didn't go too far with the example. Mark says, so how we take profit? Yeah, I'm gonna get to that. O'Neil says dope. CIAAA. And Mark says super dope. As market executions have market executions ever backfired on you before, and how can we avoid it if possible? That's the issue right there, O'Neil. I have been, backfired on plenty of trades. Market executions may have, gone left and things like that. But it's not about avoiding it. It's just making sure your risk management is correct so you can handle the loss. Like, as a trader, don't duck the loss. I'm just being real with you. Set your trade up, know your risk management, and live by that and die by that. Once you get to that mindset that losses are absolute byproducts of success, sometimes you have to take an L to understand the market's trying to tell you something. Okay? Like, you get to the point where even in my losses, the market's showing me, oh, this is what we're doing now. You need to reevaluate your outlook on the market. Because when the fibs are breaking certain zones and my stop loss gets hit, I'm like, oh, this thing's going the other way now. I need to pay attention. And you start to get a very good understanding. So don't duck losses. You accumulate more losses trying to duck them. Like, just get to the point where you know what your levels are, you know what your risk management is, and you live by that. Like, you just have to make peace with your trading plan and know this is what I'm going to work with. Because if you start making corner cases for every little scenario that doesn't feel right at every single moment, your whole strategy goes to nothing. Very important that you keep the same methodical thought. Like, people, I don't know if you guys have ever heard this before, when people say when you become profitable as a trader, it becomes boring. And I think boring is a bad word to use. It becomes more mechanical. Like, it's more of a muscle memory thing. Like, you get to the point where price hits a zone, you enter, you understand what you're getting into, you know where your stop loss is, and you just move on. You're looking for the next setup. All right. You have to get to that point where trading isn't a rush of emotion every time you see price get into your zone. You just know what you need to do and what your thought processes are throughout the stages of your trade. If you manage the trade properly, trading is like, it's like a job. Like, you get to the point where, like, you check in on it, you set a couple alerts, it hits the area, you decide if you want to take profit or not, you decide if you want to take more of it off the table, leave it in there based on what kind of candles you get when areas hit your zones. Like, there's been times where I've entered trades and it shoots through this area, just tears through it, and I'm looking at this thing saying, why would I close it? Like, usually I take the majority of my profits off the table if I start seeing candles do this, right? If I start seeing candles go, I'm in profit, and area hits the zone, a little bit of a slowdown, all of a sudden, wicks. And I'm like, yeah, that's not a good sign. I'm going to go ahead and take the majority of that off. Like, cause you already are seeing rejection signs. The sellers are already slowing down my large movement I've gotten. What am I rolling the dice for here? I'm in profit. What's the point of me who am I trying to prove something to? I've gotten what I came for. Okay. He said, come on. Say fall off and more quickly. Let me go up here. I think I missed one. He say, I think I get it. Enter at the 618. And if it goes past, oh well, take the loss. And that's just usually what I tell people who are new sometimes. Like, that 50% zone for me is a very powerful zone. The 618 is great too. But here's the deal. Let's say you got a small account, right? And you want to use the 618 as your enter zone, but price breaks through this area. And let's say you have an alert at the 50%, but your trade is at 618. You can also set another alert at the 618. So when price comes back up to break out of here, you can take a market execution or put a buy stop where when price leaves, it just stops, picks you up, and keep on going. Okay. So you can strategize around the movement based on your account. So you don't have to feel that kind of heat. If you have a small account and this drawdown before it pulls back could hurt you, just set alerts and wait for price. Once price enters, at some point it's got to leave. So if it leaves, it takes you with it. right? Same thing here. If price hits this zone, you start seeing it push away, set your alert saying, okay, I want to see what kind of movement I get here. If I see nothing but wicks here, that's a strong sign to buy because I know buyers live here. I've already seen them. They have made a large movement already. Okay? And the same thing, guys. Let me just go ahead and make this real simplistic for you. Even what I've shown you guys, let's work this on a smaller scale, just so you can see how powerful this is. If I went from this low, right, to let's say this high right here with these two candles, use this as a high. I just want to show you what the supply and demand zone looks like, so you can laugh real quick. 786, 886, right? And then 50% 618 zone was our first zone price pullback. Boom. This was the area price would have bounced up in your area and pulled up and gave you some profit. Then same thing again, guys. Just because I want to show you like how crazy it is, even on high point, down the low point here. Where's the first place the seller's going to show up? 50% 618. Let's flip it to red because we know this is for the sales. Right inside of here. Come on now. Come on now. And then if I put a smaller zone here for a 786, 886 area, potential supply here on a smaller scale, well, right around here. Bring that down just a little bit. See right there. Line it up. We get rid of the fib. Like, look at the levels and the accuracy. Same thing, price gets here, runs to area supply, drops back below. Okay? I want to make sure. You say long wicks, not so good. Yeah, so you want to make sure you're finding the areas where the bodies are closing, and you look for the wicks that are in that zone. Like, okay, if this is an area where we have a high, even though that sell moment or the buy momentum from here pushed this up a little bit and then finally dropped off, it's fine to use that wick. And same thing here, price is pushing down. This is my lowest candle here. I'm just going to use that wick. Okay, you don't want to get seduced by wicks that have nothing to do with, like, even though this is my highest point, this candle wick may have pushed up, but this isn't my highest point. This, where candles have closed, is my highest point. So I'm not going to get seduced by that kind of stuff. Okay, I told you I was going to blow your mind if this was your first time here. So this is how consistent it is. Imagine being able to just scalp. Like, you know what I mean? Like, you're getting all of that information. Now let me just kind of keep moving forward here. So I want to make sure I kind of covered that one question that you asked, Lauren, so you can see what I mean. But using the 618 is still strong, but that 50% is going to give you that consistency you're looking for. But if you don't have the account that can handle drawdown from 50%, moving down to 618, or even breaking a little lower, and then maybe coming back up again, like, just be patient. Just be patient. Let an alert hit, and if price breaks into your zone, right? The thing is, we always make decisions on closed candles. If price breaks into your zone, just put in a little, an order outside of the zone, so when it leaves, it just picks you up and takes you on the way. It says, how long did it take you to learn how to trade? I've been trading going on 5 years now, and I always joke and tell everybody, the only reason I'm at where I'm at now is because I just got kicked in the mouth a lot more than everybody else when I was trading. It took me a while to get used to the mental side of it, because most of the trading guys, this stuff is simplistic. Like, you're seeing how fast you're understanding this already, and you guys have been here an hour, right? You understand supply, demand. I'm doing smaller zones. You guys are like, whoa, that was easy. Look how price reacted to that, right? You guys are seeing it instantly. The trading stuff is simple. It's just not easy, but in the same sense, you are the hard part. Your mental approach to this is going to be the most difficult thing, because here's the caveat to all of this. When I tell you that this is the area you want to buy in, you just watched a large movement up, and then you just seen a large movement down, and I'm telling you to buy in the face of all these sellers. Okay? That is a issue for most people when they see something like this happen. So I want to make sure I'm just really breaking this down so you guys can see what I mean. Where it comes off simplistic in the examples, but then when you go back and retest and you're doing your own methods, it's like, whoa, this is not as easy as it looks when I'm doing this on my own, because I'm a little nervous about taking this buy in the middle of this sell momentum right in my face here. Kendrick says, I've been trading since April. Oh yeah, you a newbie, man. That's good. You got an experience ahead of you that's gonna be amazing. Just embrace every bit of it. Embrace the L's, embrace the rough days. Because I'll be transparent with you guys. If you want me to tell y'all guys about my worst day, my worst loss in trading, I'll break it down for you. I scare people away when I do it, but only if y'all ask. If it's okay with y'all, I'll go ahead and tell y'all my worst day. I've been trading since April, and I've had good weeks and bad weeks, looking for more consistency. And a lot of times with the good and the bad weeks, like, the biggest issue for new traders is that you haven't implemented a trading plan. Because I'm gonna be real with you too. Like I just said earlier, it's a psychological game with trading. The biggest problem with new people is that you guys are very excited and you have the drive to become great, but you don't understand that it requires that the plan removes you from it, because at the end of the day, you're the problem. I hate to be the one to say that and kind of sound blunt about it, but you are the biggest problem in your trading. As much information as you have, as all the sessions you've watched, all of the information you've accumulated, you're your biggest problem, because you're going to be human at the end of the day. You're going to have a bad day. Your job's going to make you mad. Friends are going to make you mad. Family's going to make you mad. Loved ones are going to make you mad. Significant others are going to make you mad. You're going to have frustrating days, right? Money situations are going to pop up. Health situations are going to pop up. You may not feel like it sometimes. You're going to have just things, right? Because we live on earth. We are humans. You're going to have things that are simply going to just bother you. And what that means is you're not going to be able to be your very best every time you sit down and look at a chart. And if you don't have a trading plan that allows you to be at your very best, because when I break down my rules, and I'm going to go ahead and just share with you guys real quick what I'm going to give you today for all of you new people. I made this for you guys because I care about you and I love you and I want to see you winning out here. Where is it? Where did I put it? Did I save it yet? Oh my goodness. Did I drop this in here? Oh, I dropped this in here. I didn't put the whole thing. Okay, so what I'm going to do is I'm going to grab that from Facebook and I'm going to share it with you guys in here in a minute. Man, I thought I grabbed that. Yeah, I'll put it up for you guys when we get out of here. But it's just it's a cheat sheet that I made for you guys. It's something like this, where I broke this down, where you got your swing high, your swing low, right? You got your sweet spot zone and potential area supply from here. And then you have your devil's advocate from low to high, right? You can see where I drew the fear from low, boom, to high. And from here, we have our devil's advocate where price hit our area. We were in profit. We hit this zone, and what happens? Buyers show up once, buyers show up twice. If I don't take profit in any one of these areas, when I'm seeing nothing but wicks and wicks and wicks within this zone, I'm setting myself up for a loss, right? I've already gotten profit, and I'm seeing what the buyers are doing where I know algorithms are triggered. And then price breaks up into our zone and comes up here and does what? Hits our area of supply and then drops back down. And after this, we had our area of demand here. What does it do? Hit our area of demand and bounce away again. All right, so all of my zones are lined up. And this is typically what you look at when you see a price chart.